Nvidia stock lost more market value in the last 30 days than Cisco's work at the peak of the dot-com bubble. $500 billion gone and almost nobody noticed because Nvidia is still the biggest company on the planet. Well, that's the same exact math that made Cisco investors comfortable in 1999, and then it cost them for the next 25 years. I'm Nate. I dig the moves the people at the top are making because the biggest mistakes investors make isn't really picking the wrong company, it's just paying the wrong price for it. So let me be clear where I stand. I've got real concerns about the AI build-out. The water, the power grid, the layoffs the story is being used to justify. I've covered all of it. But Nvidia, the company, I actually believe in. Jensen has built the most protected company in modern history, and I'm still going to tell you what could go wrong with the stock because that's the information that you need. So here's what Cisco actually teaches us. In March of 2000, Cisco was the most valuable company on the planet. The routers and switches that powered the entire internet. Cisco investors were right about the internet. They were right, that Cisco would dominate. They still lost 88% and waited 25 years to break even. Why'd it happen? Well, the company tripled in size over the next 20 years, but the premium disappeared. The company grew, but the stock stayed dead. Being right about the story is really not the same as being right about the stock. Now, here's the part that should make you pause a little. The specific argument fueling Nvidia's rise, that demand is exceeding supply, that hyperscalers are ordering years in advance, that we can't build fast enough, is the exact argument that fueled Cisco. Companies built infrastructure that they couldn't build fast enough. Then demand caught up. Then it passed. Then the plateau came. The narrative that feels like proof of durable demand today is the same narrative that has fueled every tech overshoot in history. It doesn't make Nvidia wrong. It just means that, that can't keep up with demand isn't the evidence people think it is. You cannot tell the difference between year 3 of a 20-year build out and year 4 of a 5-year overshoot. Not in real time, not with better data, not by being smarter than anybody else. But here's the honest bull case, and it's real. Nvidia has structural advantages that Cisco never had. Jensen has repositioned the company, honestly, from a chip maker into really a national security infrastructure. Governments don't let those companies fail, and we don't know how big AI demand even gets. If it keeps expanding at anywhere near the current pace, today's valuation honestly might look cheap in 5 years. Both things can be true. Nvidia might be the most protected AI stock on the planet, and Nvidia can still see significant correction in the next 18 months. Being essential and being investable, at any price are different things. Listen, I'm not a financial advisor. I'm not telling you to buy or sell anything. I'm just helping you separate two questions that most people are lumping together. Is the AI story real? Yeah, almost certainly yes. Is Nvidia the right winner? Yeah, probably. Is today's price a good entry? Well, that's a completely different question. The Cisco investors who lost 20 years of returns weren't wrong about the internet, weren't wrong about Cisco being the winner. They're wrong about the price. That's the only mistake that matters. So follow for more and hate the market with me.